Hello, everyone, and welcome to our lecture series on managerial accounting. And I am your instructor, Jamal Haidar. Today, we are starting a brand new chapter, activity based costing, which is a tool to help in decision making. And this is chapter 8 from your book, it introduces to you the activity based costing, which is a tool that has been embraced by a wide variety of service, manufacturing, and non-profit organizations as well. So the short form of activity-based costing is ABC. So let's define the activity-based costing, or ABC. So ABC is a costing method that is designed to provide managers with cost information for strategic and other decisions that potentially affect capacity and therefore affect fixed as well as variable cost. So it is ordinarily used as a supplement to rather than a replacement for companies' usual costing system. So managers, they normally talk to each other like that. ABC is a good supplement to our traditional costing. So basically, it further add benefit when companies is using some kind of its own traditional costing methods. So here comes our first learning objective, that is understand activity based costing and how it differs from traditional costing systems. So let's do that. So how costs are treated under ABC? So ABC differs from traditional costing in three ways. Number one, that non-manufacturing as well as manufacturing cost, they may be assigned to a product but only on the basis of cause and effect. On the basis of cause and effect, right? So the example is that the ABC systems, they can assign sales commission, and you can just say that sales commissions, shipping costs, or warranty repair cost to, let me write it, commissions to specific product, right? That's going to be the example. So what was the number one? That ABC assigns both types of cost to a product. In previous costing systems, like period cost and product cost, some costs are assigned to period. Sorry what my writing is really bad. And some costs are assigned as product, right? So that is the number one. That is ABC assigns both types of cost to a specific product as well. And the second major difference between ABC and traditional costing is that some manufacturing cost may be excluded, right, from product cost. So why is that? This is because ABC only assign a cost to a product if the decisions concerning that product will cause changes in the cost, the same cause and effect method. But here comes the ABC excludes two types of cost from a product cost. The number one is organization sustaining. So which we will define in a couple of slides. And the second one is unused or idle capacity, right? So ideally that is a part of manufacturing cost, but ABC does not include these two costs, which is organization sustaining cost, idle capacity or unused capacity cost, right? So we can just say that the second difference is ABC does not assign all manufacturing costs to a product. And here comes our third major difference between traditional costing and ABC, and that is that the various overhead cost pools are used. So each of which is allocated to products and other cost subjects using its own unique measure of activity. So ABC cost pools are created to correspond to the activity performed in an organization that cause the consumption of overhead resources. So in ABC costing, the total number of cost pools will definitely exceed from one, like in our previous traditional approach in which we have only one base here, for example direct labor hours, and here there is manufacturing overhead, and we divide it by direct labor hours. So basically the third major difference, difference is that every cost, we are defining the cost differently, and every cost has its own cost driver. So rather we dividing the whole MOH, manufacturing overhead, by one activity, that is direct labor hours. Sorry, this is DLH, direct labor hours. So it means every cost is divided here by its own cost driver or cost activity driver, right? So that's why the ABC cost pools will definitely exceed from one. So, and it is likely to exceed the number of departments within a company as well. So since more than one activity is often performed within each department. So plant-wide overhead, departmental overhead, and activity-based costing. So in plant-wide overhead, we are dividing by number. For example, manufacturing overhead divided by its driving cost, that is direct labor hours. Departmental overhead, for example, if this is the marketing department, that is divided by the sales orders, right? So its overhead, is divided by sales order. And activity based costing, whatever kind of activities, we're going to divide these activities and we're going to divide it by its own drivers. If you don't understand this concept right now, then don't worry about that. Later on we're going to talk about extensively what is this. So to elaborate further, we were saying that each activity has its own cost driver. So here it comes that each ABC cost pool has its own unique measure of activity, whereas on the contrary, the traditional costing systems usually rely on volume measures such as direct labor hours, machine hours, to allocate all overhead costs to the product. So direct labors and machine hours, they work correctly when changes in the quantity of base, they are correlated with the changes in the overhead cost, right? For example, if we are dividing manufacturing overhead with direct labor hours, so activity basically base costing, they say that these two must be correlated, right? So if which is saying that if this cost is basically derived by the denominator, then this equation or this ratio is true ratio, or that's a logical ratio. right? Because the base is basically driving the numerator. So I am using activity. So let's define what I actually mean by this activity. So activity, which means it's an event that causes consumption of overhead resources, right? An activity cost pools, a cost bucket in which costs related to the single activity measures are accumulated. So let's go through the next slides, and I hope in coming slides you're gonna be familiar with those two terms.